Thanks for staying with us on Point. Let's take a look at what's happening in your market news now. Asian shares dropped today in concerns of how new coronavirus outbreaks in the region could undercut an economic recovery, even as robust momentum in the United States prompted the Federal Reserve to contemplate a quicker exit from accommodative policy. Chinese stocks were also down 0.95% as investors booked profits after a rally on the back of the country's strong rebound from the impact of the COVID-19 pandemic, with financial and consumer firms leading the retreat. The Nikkei falling 0.91%. The Hang Seng Index fell 0.9%. Let's go to the United States now and take a look at what's happening on Wall Street. The Nasdaq and S&P 500 headed to all-time highs on Monday, fueled by tech stocks as interest rates remained low, while investors awaited data on the U.S. labor market due on Friday. The Dow Jones Industrial Average fell 0.44%. The S&P 500 gained 0.23%, and the Nasdaq Composite added 0.98%. Let's go to Europe now. London's FTSE 100 edged higher on Tuesday, led by gains in home builders, while rising cases of a new coronavirus variant in Europe and Asia raised fears of a slower economic recovery. Let's take a look at the rest of the markets. Right, let's get some analysis now. I'm joined by Nessa Nair from Sasfin. Thanks so much for your time on SABC News this afternoon. So US markets closing up really high yesterday. What's driving that?
Giving us a lot of mixed signals. As you mentioned, this tech rally seems to continue to gain further and further momentum following from the beginning of the year, following from last year. And while at the same time, Asian markets seem to be pulling back. I think there's lots of anticipation about that expected jobs number coming out from the US, as you mentioned, towards the end of the week. And I think, ironically, a bad number would actually be quite good for the market because it would signal that the Fed would need to pause on its potential plan to hike interest rates and to be a little bit more accommodative. So I think very big expectations for that number coming out towards the end of this week.
Listen, speaking of tech, Facebook hitting that $1 trillion valuation after a judge rejected those antitrust complaints.
Yeah, that was also a big surprise. I think for a long time now, a lot of the Facebook investors have been preparing themselves, almost for a battle with the federal government when it comes to regulation, specifically around antitrust regulation, but also as well as privacy regulation. And this was a little bit of a surprise. So, Facebook is a $1 trillion company like the likes of Amazon and Apple. But, on the back of this this decision by the federal court, I think it might actually be setting up Facebook to play catch up with some of the other tech stocks that kind of ran ahead of it because of this impending regulations.
All right, Jason, let's go over to Asia. We saw those markets slipping a little bit because of these concerns over this new variant, that Delta variant. What else is driving the market picture there?
Yeah, I think, Asian markets seem to be focused quite squarely, on the coronavirus outbreak, this new Delta variant that obviously originated in India and seems to be spreading throughout the world, actually, is giving a lot of people lots and lots of concern, Asian investors in particular. But at the same time, again, there's this discontinuity between what's happening in the US markets and what seems to be happening everywhere else in the world. I anticipate that, the sort of lull that we've experienced in Asian markets may actually continue because there's not enough tech shares to sort of raise the tide in that specific geography.
Okay, let's come to South Africa now. We saw the markets closing in the red yesterday. Retail stocks dropping. That's attributed to the announcement of a stronger, harder lockdown level 4. We saw a little bit of a recovery this morning. What's happening with the South African markets now?
Yeah, so I think today investors have absolutely nothing to complain about. This was one of the few days in the last sort of two and a half weeks, ever since that Fed announcement on that very hawkish Fed announcement. I think the markets are up, well over 1% today, driven by local stocks. It's the financial shares. It's those retailers you're talking about. Big bounce from the retailers, obviously on the back of a much weaker last 2 weeks. But I think the bargain hunters seem to be out there today in Singapore in full force. Looking at these oversold South African shares and potentially planning for a much better outlook after the sort of 2 weeks of this hard lockdown is over.
Listen, when you're going through the news on the market, is there anything that's catching your eye in particular that's making you think, okay, let me take a look at this twice? Anything of interest both locally in our company news and internationally as well?
Yeah, so I think there's, I'm in the camp that thinks that maybe this inflation story, this global inflation story, is a little bit overplayed. I think that we need to prepare ourselves for high inflation compared to what we've seen in the last 10 or 15 years. But I think the stock market is discounting a much worse story. Even if you look at the local shares, there are very big oversold positions in the financial shares, in the property shares, in the retailers, in the banks, insurers. There's lots and lots of value out there. And we are going to have a world post-COVID-19. A lot of these companies are still going to survive. So even if you look at results out of the smaller companies came out today, Argent, Cap Industrial, these are very small South African businesses, in the context of the overall JSE. And their results are very upbeat. So I would encourage investors to start looking at opportunities, to get into some of these shares while the share prices still remain very low.
Okay, and when we're going forward, what investment news are we looking at this week or looking forward to in the next week as well?
I think lots of people are going to be just squarely focused on this U.S. jobs number, particularly because the Fed seems to have pivoted, if I can use that word, a little towards a higher inflation. We have to see whether the U.S. employment statistics is going to justify that pivot or not. And if it doesn't, then more than likely we're going to have, I think, a very a longer sort of accommodative stance by the Fed. A very different sort of message at the next meeting.
Nessa Nair from Sasfin, thanks so much for your time and insight into the markets this afternoon. Nessa Nair from Sasfin joining me via Zoom there. It's time for a short